Hi, everyone. Chris Johnson with Money Morning. SuperMicro Computer Incorporated, SMCI as a ticker, is up more than 700% over the last year. But the last 2 days, it's dropped more than 35%, leaving a lot of investors asking, what is wrong with this stock? There's nothing wrong with it. There's a property about this stock that you need to know that makes it this volatile. I'm going to share that with you in the form of a childhood game, as well as the price that I'm looking to buy the dip on SMCI. I'm even going to tell you about another stock in the S&P 500 that shares the same property as SMCI that gives it a volatility edge. All of that in 5 or 10 minutes. It's going to be well worth your time. Let's jump into it. Okay, I've already mentioned that SMCI, SuperMicro Computer Incorporated, is one of the hottest stocks from a performance perspective in the AI space. This company has just kicked in the door and taken over everybody's attention as it's up more than 700%. But over the last couple of days, it's down 35% from its highs, over $1,000 a share. It's got a lot of people asking, what's wrong with this? Am I getting ready to be taken for everything? No. It comes down to a simple explanation I'll get to in just a second. Let's talk about some of the numbers here and what the stock has done. I've already mentioned 700%, but more importantly, since January 29th, the stock is actually up more than 100% after giving a great earnings report. Now, one reason for that, and I always talk about expectations. Expectations on SMCI were almost non-existent. Nobody really was talking about this stock as in terms of an AI leader, which it's clearly on its way to becoming. But that no expectations is one of the things that allowed the stock to take off and go parabolic. There's another big reason that'll come up in just a second, but know that that's part of this equation. The bottom has fallen out of SMCI over the last couple of days, 35%. You can see it pulling back towards that $700 level after going well above $1,000. Now, some of the analysts are coming out and giving us some words in terms of where the price is going, and that's important, as you'll find out here in a second. But from Main Street's perspective, you and I, we're looking at this and saying, hey, the stock could go down 50% before it's done declining, and it could. It all comes down to one thing that adds to the volatility equation. Let's jump into that for a second. And by the way, I love some of these comments. When I did a video on Nvidia last week, I had some comments. Just look at SMCI. It's still enjoying meteoric rallies daily since its last earnings. Absolutely. But this downside is going to be there for a while. SMCI is looking at Nvidia and saying, hold my beer. That was one of my favorite comments, by the way. Nvidia coming up after hours today. We'll see what happens. But let's keep talking about what is the thing that is moving SuperMicro Computer. So you know that I watch the expectations from Wall Street, what the analysts think, where they have it, buy, hold, sell. It is very important. We're talking about sentiment and expectations here. So when you look at the two stocks up here, the percent of buy recommendations versus holds or sells, they're kind of similar. Right now, SMCI is at 80%. You've got Nvidia at 92%. They're both crowded from that perspective, which is something I don't like to see. But there's a difference, and it's right down here. The number of analysts. You're still seeing SMCI come on to people's desks and trying to figure out what's going on. Only 14 analysts cover SuperMicro Computer. 52 analysts are covering Nvidia right now. So, couple different things that you want to note here when you're looking at those expectations. The buy recommendations may be similar, but the difference between the number of analysts, 14 and 52, is what is huge, and that is what's helping SuperMicro right now. When it comes down to it, it's still in the discovery phase, not only for Main Street investors getting it on their radar, but Wall Street. Remember, they're going to dig through the fundamentals. They're going to look at management, and you're going to see Wall Street start to add this to their list of stocks you should be buying, which means you're going to have more money that is driven by those analyst recommendations. Wall Street analysts like to travel in numbers. So in other words, they like to be part of that discovery phase. 14 versus 52, my guess is we're going to see 20 to 25 analysts with a buy, hold, or sell recommendation on SMCI by the end of the year. and you're going to see those price targets go up. Right now, the highest price target out there is at $1,300 on SMCI, which it could do with one more good earnings report. But there's something besides the analyst right now that is driving the stock, and that is something I refer to as scarcity. Let's talk about the float for a second. So what is the float? Well, according to Investopedia, the float are the regular shares that a company has issued to the public that are available for investors to trade. So this is what's available in terms of inventory on the stock. Now, just to give a comparison here, right now the float for Nvidia is 2.4 billion shares, 47.5 million shares for SuperMicro Computer. So you can see there's a huge difference in the number of shares that are available to trade in the market every day. Now, I already mentioned scarcity. That creates scarcity on the stock. Think about the pandemic when you were going to buy milk or bread at the grocery store. Maybe there wasn't much out there, and there's a little more price volatility, right? That's what helped to fuel inflation that we saw in 2021, 2022. The same thing happens with the stock. It really is that simple. I like to talk about simple things here. Think of it as musical chairs back in kindergarten or first grade. When you had 20 or 30 chairs plus one student on those numbers, it was pretty easy to find a seat to sit down. But when you get down to 3 or 2 chairs, when that music stops, you've got students fighting for the leftover chairs. No different here. Whenever there's a lower float, you're going to find that investors are actually going to fight to get into those shares, and that causes that volatility to the upside. And then when you start to see just a little bit of selling, it's what causes the volatility to the downside. I hate to use it, but it really does apply here. Think about yelling fire in a crowded theater. One door to get out, you're going to see people rush through that door. That's exactly the situation that's happened over the last couple of days. That's why you get the parabolic moonshots. You also get the quick and fast pullbacks. Here's just one more stat on that, and I don't want to get too deep in the numbers, but this really does show you what's happened here. Over the last 2 days, using that float for both companies and the volume that's traded, you've got 1,200% of the float, 12 times the float that's traded on SMCI, whereas only 5% of the float on Nvidia has traded. So there's just more inventory. And believe me, Nvidia can be volatile, and we'll see volatility after the earnings report, but that shows you, that really punctuates that scarcity that I'm talking about and why we're going to continue to see that volatility on SMCI. So let's go on to the next page here and talk a little bit about how you trade these volatile situations with low float stocks. Realize that float equals more volatility. Crescendo volume, it means something. I'm going to show you in a chart exactly what crescendo volume is. Maintain your eyes on the horizon. Look out to the long-term expectations. Keep your eye off those waves. You'll get seasick with these low float stocks. And then realize that option prices, if you're trading options, they're going to reflect that low float and the volatility that comes with it. So you're going to pay a lot more in terms of premium on options if you choose to buy them. So, and I always tell people, make sure you get the education on options before you start trading them. So let's kind of take a look at the chart and my expectations for the stock here. Now, as I mentioned, we've seen SMCI that has traded almost up to $1,100, and that was at the end of last week. And this was that push. Now, I mentioned crescendo volume, crescendo situations. Right here is what you see, like an orchestra that plays up to a high point in the music. You've seen this volume go through the roof. This is where investors were fighting to get into those scarce shares. As a result, we see the volatility that takes us up to that 1,100, and there's a psychological thing that goes on that's going to help you pick the price to buy SMCI at. We went over 1,000 shares. I always tell people the more zeros behind a number in terms of price, the more psychological the effect will be. As soon as investors that were buying it down at $300 or $400 saw that $1,000 price tag, they want to get out and take some of the profits. And that causes that tilt in the stock, and then the scarcity works against the people who are trying to get out, and that is what moves the stock down. so quickly from those highs. So there is your crescendo moment when that volume is going through the roof. We also see down here the RSI, that thing that tells us whether a stock is overbought or oversold, extremely overbought. And then that $1,000 level, just way too much. Now, the next thing you have to ask is, hey, CJ, if I want to get into SMCI, where do I buy it? Keep in mind what I just said about round numbers. You can see this initial pullback took us down to $700, right? From 1,000, you're about 35% from this peak. So look at that $700 and how it is being tested here 2 days in a row. When Nvidia reports their earnings, we've got some potential volatility that'll take us down to this 20-day moving average, which is a short-term trader's trend line. But at that point, I start to look down here at $600. You're not quite half, but close to 50% off of those peaks. And as somebody who wants to be in the stock long-term and looking at the horizon, that is an easy price for me to start taking some shares down. Now, I should mention that I already do have a very small position in SMCI. I'm one of the fortunate ones that got in before this parabolic rally. So I'm adding to my position here on that pullback, buying the dips. Now, I said that I would give you another stock in the S&P 500. This is in the Russell 2000, so it's a very small cap stock. Part of the reason why the float is small. But I want to give you another stock, and this will be a little interesting because most people might be a little surprised over this stock. But ULTA, the cosmetic company, the retailer, they share that same property of being a low float stock, and they're in the S&P 500. If you're not familiar with ULTA, take a look at the stock chart over time. This has been one of those stocks that absolutely confounded Wall Street. Nobody could understand why the stock was going up in 2021, 2022, and it pulled back dramatically in 2023. But now the stock is getting ready to make some new highs here, and that low float situation is going to help volatility drive it higher. One key thing, everybody thinks of volatility as being a bad thing. If you've got your directions and your long-term perspective, volatility can often help you. I always tell people volatility is a trader's best friend. If you're a long-term investor, keep your eyes on the horizon. Don't look at the waves when we hit those volatile moments. So there you have it. SMCI, I like it at 700. I like it more at 600. It's a situation where I think the round numbers are going to play it. Play it that simple, folks. And put ULTA on your stocks to watch as one of those low float companies that should provide some volatility to the upside. Till next time, I'm Chris Johnson, wishing you the best trading success. Don't forget to like and subscribe and leave those comments. We look at them. Have a great day.